Hello traders, you are welcome back to the Forex Geek channel, and you are welcome to this video especially if you are looking to step up your Forex game and get closer to becoming the king of Forex. Then you've clicked on the right video. So today we are going to be looking at some powerful tactics and strategies that are key for anyone who wants to excel in the Forex market. Now, before we get into these strategies, do me a favor, hit that like button if you are ready to start trading like a pro, and don't forget to subscribe for more insights, strategies, and tips to help you take control of your trading journey. All right, so let us jump right into it. You might be wondering, what exactly does it mean to be the king of Forex? In my view, it means mastering not just the technical aspects of Forex, but also the mental and strategic parts of trading. Being the king isn't about taking risks with every trade. It's about building a method that brings consistency, confidence, and control, right? One of the biggest differences between amateurs and the pros in Forex is having a clear system in place. Now, many traders rely on intuition alone, and while that can sometimes work, true masters know how to combine both experience and data. Okay, so in this video, I'm going to walk you through the techniques and principles that separate the champions from the crowd. All right, now let us start with technical indicators. Now, there are hundreds of indicators out there, but the key is not to use all of them. Okay, it's to understand which ones align with your trading style and goals. Personally, I recommend starting with the fundamentals, especially if you are a newbie, okay? If you are a master already, then of course you will know which indicators suit you best, right? If you are experienced already, you will know which indicators suit you best. But for newbies, I'm going to recommend starting with the fundamentals, which are moving averages, the relative strength index or the RSI, and then the moving average convergence divergence, which is the MACD. Now, these indicators help provide insights into market momentum, trends, and potential entry and exits. All right, potential entry and exit points. For example, using the 50 and 200-day moving averages can reveal long-term trends in the market. Let me just add the 50 EMA and the 200 EMA to the charts. Okay, this is the 50 EMA. Let me add the 200 EMA as well to the charts. All right, here we go. Now, okay, so this indicator is quite easy to use. Okay, basically when the 50-day moving average crosses above the 200-day moving average, it's generally seen as a bullish signal. Meanwhile, the RSI can help you identify overbought or oversold conditions. Okay, this is the RSI. It can help you identify overbought conditions when the value is above 70 and oversold conditions when the value is below 30. All right, and it can be a cue to enter or exit a trade. Now, the key here isn't just knowing these indicators, but understanding how to use them in context. Just remember, indicators are guides, not guarantees. Okay, the king of Forex knows how to read them, interpret them, and most importantly, act accordingly. Now, let's talk about something that every great trader knows: the importance of market psychology and controlling emotions. This is where so many traders struggle because emotions can cloud judgment, especially in a volatile market like Forex. A true king of Forex knows how to stay calm and disciplined, no matter what the market is doing. Instead of acting on fear or excitement, successful traders stick to their plan. For example, if you are trading and the market suddenly turns against you, your instinct might be to panic and close the trade. But with a clear strategy in place, you will have predetermined points for entering and exiting the market. One technique that can help with emotional control is journaling your trades. Okay, it's very important. Documenting each trade forces you to analyze your decisions and provides you with feedback on what's working and what isn't. Over time, this habit builds your confidence and helps you become more mindful of your emotions. Now, another big factor in becoming the king of Forex is consistency. Many traders jump from one strategy to another, hoping to find a magic formula. The truth is, consistency is key. It's about having a well-researched, adaptable strategy and sticking to it over time. All right? The strategy might include specific setups you look for, say a breakout from support or resistance levels combined with confirmation from RSI or MACD, or maybe you prefer trend following strategies that capitalize on long-term moves. The details of the strategy aren't as important as sticking to your plan. Okay, I know this can be tough, especially when a trade doesn't go your way, but remember, every single trade doesn't have to be a winner for you to be successful overall. Okay, the goal is to find and refine a strategy that delivers consistent results in the long run, right? Now, let's talk about applying these techniques in the real market. Let's say you're analyzing a currency pair. For example, we have the XAU USD on the chart here. Let's say you're analyzing gold and you notice the RSI is signaling an overbought, the RSI is signaling an overbought condition. Yeah, while the price is nearing a major resistance level, it's important to have your resistance and support levels set. Okay, they play a very important role in technical analysis. All right, so let's say you find that the RSI is in overbought territory and then price is nearing an important resistance zone. Okay, this could indicate a potential reversal point. So you might place a sell order here, setting your stop loss just above the resistance. But here's the part that many people skip: risk management. Even with a good setup, you want to make sure you are not risking more than a small percentage of your trading capital on a single trade. This is what helps you stay in the game longer. The king of Forex understands that preservation of capital is as important as making profits. The goal is to have setups like this consistently while protecting your downside. Remember, every trade is a learning opportunity. Review each trade, take notes, and see what you could do better next time. All right? So to wrap this up, the real edge in Forex trading isn't just about strategy or technical knowledge. It's about building confidence and staying in the game for the long haul. Now, becoming the king of Forex is a journey, and each trade you make is a step toward mastering this craft. So if you found value in this video and you want more content to help you elevate your trading skills, make sure to smash that like button and subscribe to the channel. I'll be sharing more insights, breakdowns, and strategies to help you navigate the Forex market like a pro. Let's keep growing, learning, and trading together. Thanks for watching, and I'll see you in the next video. Until then, happy trading.